Hello, my name is Hunter Smith, and I'm with MetaStock, and I'm very excited to introduce to you our newest add-on, Joe Duffy's Scoupe Suite. We've had the privilege of working with Joe for a little while now. He is actually a very, very highly accomplished trader, has had a wonderful long career. He's actually a three-time top 10 finisher in the United States Trading Championships. And we've been actually lucky enough to work with him utilizing his methodology and taking that methodology and putting it in an easy step-by-step format into MetaStock. Now, this system actually comes with original trading tools designed to identify market behaviors that occur and repeat in all markets. It's very visually intuitive indicators with not the screen clutter that you're going to find with a lot of other systems out there. All the indicators have been verified through rigorous historical testing, and it is actually an add-on that works across all markets. It's applicable to futures, forex, stock, and options trading, and it's good for all time frames. Now, this add-on, like I said, is very robust. It comes with 4 system tests, 1 template, 9 explorations, and 4 expert advisors. Now, what I'd like to do is have Joe take a few minutes here and explain a little bit about his methodology and show some different examples here in MetaStock. And ladies and gentlemen, Joe Duffy.
Okay, thank you very much, Hunter. Again, Hunter's gone through some of this already. www.jd Trading Systems is my website. And Hunter's gone through, this is what the indicators basically look like. This is the sort of flagship Scoupe Indicator. This and the API trading system are really the 2 most important flagship tools. We talked about real-time performance and hypothetical performance. Again, neither guarantees future results. All trading involves risk, but having said that, real-time performance is certainly much better than hypothetical backtesting. Here is a recent account statement. This is a non-futures account. It's stocks, options, and ETFs. For the last year, current month 5.9%, 3 months 8.2%, 6 months 55%, and the last calendar year, or the last 12 months, sorry, 125%. That's options, ETFs, and stocks. Okay. So with that, let's get into MetaStock here and introduce a few of the tools that we're going to use. Now I'm going to have to change the equity here because I've got obviously something that doesn't have a lot of data with it, so I apologize for that. Let me go to the SPY. We know that has data. Okay. First of all, we all know that in the stock market or commodities or forex or whatever you're trading, it is never as simple as if A, then B. Okay? The market does not give up her secrets that easily. So for instance, oversold, overbought, they're just lines. You can't sell short when it's oversold. You can't buy long when it's oversold, because they are relative terms, and the market's not going to repeat or retreat just because RSI is over 80 or under 20. Similarly, 2 lines crossing, whether they be moving averages, MACDs, whatever, it's just too basic. We all know, we've all been through that. It doesn't work. The market's just more sophisticated than that. So what we're looking for is something that is simple, but sophisticated enough. So the idea being, I guess, going back to simple is better, but not simpler than it has to be to work. Okay, simple as possible, but not so simple that it doesn't work. So that's what we're doing here. That's our basic philosophy. Now, going a little bit further, what we're going to look for is the type of markets that we want to trade in. And one of the basic philosophies that we found, that works the best, is that trends do not give up without a fight. Okay, trends do not give up without a fight. Okay. Now, there are many ways to define a trend. Generally, people will say, oh, if it's above the moving average, well, it's an uptrend. If it's below the moving average, it's a downtrend. Well, again, much too simple. Okay, that doesn't work. So we've identified a number of conditions and codified them into code. And one of the first things we've done here is put these little diamonds on the, as you can see, these are expert advisor diamonds that show up here on the chart. And when we have a series of diamonds, the more diamonds there are in a series, the more powerful that trend is likely to be. And going back to our philosophy, the more likely we are going to be able to get in that trend because it's not going to give up without a fight. So any pullbacks in that trend are opportunities to buy because it's going to want to keep going. It may not even make a new high, but if we're buying the pullback, the attempt at that high is plenty enough to make money. Okay, so the more little diamonds that we have, the better. The second part about this is that if a diamond happens on a Tuesday, that doesn't mean we want to buy on the Wednesday. That's the other thing, that the market is just never that direct. So once we have this, the diamonds showing up here, we're going to allow about 40 bars or so, give or take, for their effect to still be with us. So again, what happened 2 weeks ago can actually be very important for your entry today. It is never as simple as what happened yesterday, oh, what do I do today? It's never that simple. So the first layer that we have is our identification of a trend that we can buy a dip in. Okay, and that's what our diamonds are. Now we have red ones, and if I scroll back here, you can see that there are times as well where we do have identification for sell indications. Okay, so it works both ways. It's just not, it's not something that works only in one direction. And a corollary to that is be very careful of systems that only work one way, because they're really just optimizing a secular trend, and that's easy to do. Okay, so once we have our diamonds, then what we're looking for is a pullback. Now, that takes us to our Scoop Oscillator. The Scoop is down below here, and you can find it back in your indicator. You can pull it and drag it down here. I've already done so. The oscillator, or sorry, the histogram is the blue lined histogram here. What we are looking for in a buy signal is for it to be above the zero line. Okay, so you can see it's above, it's above, it's above, and you can color code it. So if it was below, you could color code it red and above blue, or whatever you'd like. What we have is our red line here is what we call our Scoop Oscillator. Now, once we have our diamonds, what we're looking for is a situation where the histogram remains blue and the oscillator comes back down into the buy area here, identifying a buy opportunity. Now, we've identified them as 1, 2, 3. 1 is usually just a sort of a warning. Okay, we're getting some sort of pullback. We might be able to buy this soon. Only very aggressively would you buy a 1. You might write some options or something if you're doing that, some under the monies, but it's the most aggressive entry, not one that I usually take. It's more just a warning. Okay, the pullback's starting. Let's get ready to enter. The 2s and the 3s are where we want to enter here. All right. There's a little green arrow that you can see here with an exit. That's just a little system that I put together that enters and then gets out after 4 days. Just ignore that for now. The entry is the 2s and 3s after the diamonds. Okay. These diamonds here are most stringent. We have another set, and I can change the template here, and I'll show you the other set, which allows more entries. Okay, so it's the exact same principle. We're looking for the diamonds. We're looking for the 1s and the 2s. So there's a 2 right here where my cursor is. You can see right here. So that would be an entry. Again, diamonds again here, if you can see my cursor. There's the 1 warning, here's the 2, there's the entry. Here we just have a 1. So again, for me, too aggressive of an entry. And such as we go. So you can see this one has more trades to it than the more stringent one, although you're going to have more trades. They're not going to be quite as accurate and reliable as the chart that I showed the first time. So you've got 2 ways of looking at this depending on how much you want to trade and how aggressive you want to be. But again, let's just look at the Scoop Oscillator because I think it is self-explanatory and visually intuitive. The histogram again is positive. Once the scoop gets below this red line here, the first line that you see, that's the 40 line. That's your first kind of opportunity to buy. And down at the 75 is kind of your ideal. So you can see right here is your ideal. Down at 75, these are the low points right here. 75, although we didn't have the diamonds within the last 40 days here. This would also be a nice entry here. And again, almost right here. And this is where the difference between an indicator and a system is. You know, how close do you want to be? This is below 40, but not quite at 75. So you have some possible entries right there. Okay, I can throw this up on some, this is the index, but we can certainly put it up on some stocks as well. Okay, let's apply the template. In fact, what we're going to do here right now is I'm going to apply the template for the system. I think I've explained how the Scoop Oscillator works pretty easily. It's pretty visually intuitive, pretty easily, and how the diamonds work. So let me apply the template that shows the API trading system, if it will allow me to do that here. It doesn't seem to. Oh, here we go. Okay. So let's put a system up here. And it also has the Scoop Oscillator on it, and we'll talk about that too. So this is a mechanical system. Now I want to differentiate very clearly that they both use the same philosophy. What's the trend? How do I get in? Okay, but the Scoop is more of an indicator. You can see it has some rules, but it's a little more touchy-feely. The system is, okay, it buys here, it sells here, it buys here, it sells here, and it puts the arrows on your chart. Okay, now you can certainly use this as an indicator, and I'd encourage you to, but it has firm rules, buy here, sell here. Now they're different. This system with the buys and sells does not depend on the Scoop, but since they depend on the same sort of general philosophy, they are certainly very complementary, and in fact, I encourage them to be used together. So in fact, Scoop here coming down where was our buy signal, but sometimes we can improve our buy signal just a little bit by waiting for Scoop to get a little more oversold by watching the oscillator, by watching the Scoop Oscillator. Now if I can, the very one most important point that I'd like to emphasize with the system, and I can't really overemphasize it, I think it's so very, very important that it goes to how very useful this system really is, because this system buys and sells just at the opening price. That's so important in terms of its usefulness for the client. We have not tortured the data to figure out the exact best entry so we can make the best back test possible, so we can make it look crazy good. Okay, what we've got here is something that's usable. The opening price the next day is going to be the best price of the day less than 1% of the time. Since we're using the open price for both getting in and getting out, that means that 99% of the time we're going to be able to improve that that price, either on the exit or the entry or both. Okay, so there's certainly a lot of room for it using as a discretionary tool, and really, really, really important in that it still shows very good profitability just using the opening prices. Okay, so you're really testing the principle, which is what you want to do in a system test. You're not trying to torture the data to extract the most powerful, best looking, historical back test. This works great with options. Couple ways to use it with options. If you buy the stock, write the call. You can see that the average trade here lasts 5, 10, occasionally 15 days. That's getting right into the bailiwick of the acceleration of option deterioration. So if you buy the stock and write the call, you hold the stock for 10 days, and you're going to get $2 or $3 of depreciation on the call, depending on what stock you're using, maybe more even. Okay, so you're going to get appreciation in the stock, and if you get called away, great. You're going to make $3, in a week or two, and away you go. Obviously, if the market moves offside, you've got some downside protection, and if the market moves sideways, well, that's almost as good as going up. It is as good as going up because you're going to make the premium on the call, and you're going to break even on the stock. Historically, this system is about 74% accurate. Depending on the stock. Some stocks it's not that, and obviously you would want to test each stock before you started trading it, which is very easy to do on the system tester. And you're going to trade the ones that are highest, the best performers. Also keeping in mind that the stock market floats all boats. So if the general average is going up, then probably most stocks are too. So keep in mind what that the broad indexes are doing. But great for options again, also great for credit spreads. Very much the same as buy the stock, rate the call. Take advantage of the premium decay. In the SPY, for instance, I use the SPY a lot. If you've got option strikes, if you're familiar with options at all, if the SPY is 255, say, a 255 call may be $2 in a little bit. A 257 call may be $1. So you buy the 257 for $1, sell the 255 for say $2.25. The most you can lose in that, no matter what happens, is 75 cents, and you can make $1.25. Okay, and you've got a system that runs about 74% accurate, and coupled with that, even if it's small offside, you're still going to make money just because of the time decay in options. So you put all those stats together, and you've got a pretty workable strategy. Should add as well that we introduced this strategy in, I think, the end of 2013, 2014 for sure, on the website. And actually, performance since then, I'd used it before that, but the performance since then has been better actually than it was before release. Now we've got many of these, but this is one of them, and I think this is a pretty good one for the average person. It's really easy to understand and really easy to work with, and as you can see, it's fairly active. Okay, you're not in for a long time, but it's great for swing trading and great for options. Okay, let's see. As I said, you can run anything that you want on the system tester. So we can run, we'll run the two options here, the two strategies here on the SPY. Start system test. Okay, view results. Okay, here's our equity curve. This is on the S&P 500. If you look at the summary, you'll see that it's about 50% better than a buy and hold strategy in terms of P&L, but in terms of drawdown, it's about 500% better. In other words, it has a substantially less drawdown than a buy and hold strategy. Okay, so again, absolute performance indicators, you can test it. Okay, you can look at it. This is how it's done over the years. Okay, that's why we call it absolute performance. If you can't test it, then I don't know why we would trade it. That's not to say that there isn't room for discretion in trading. There is, but you have to have some basis to go off of, and then use your discretion thereafter. Explorations as well. You can specify what stocks what stocks are meeting the system criteria, or what stocks. Let's just look for the API here. You can use the test for the both diamond patterns. You can test for scoop below a 0 with a histogram above 0. You can search automatically through hundreds of stocks for all those patterns. But we'll just run the exploration here on a little package of 10 stocks, and it'll give you a report. It'll say, okay, these are the stocks that today out of my 10 are on buy signals. Okay, so again, but you can test for everything or explore everything. What stocks have the diamonds, what stocks have the scoop setup, what stocks are the systems, and I would encourage you to use it all together. The scoop with the system is great. For instance, when you get into real chop, if we go back a bit, if I can see if I can find some chop here, sometimes when the scoop isn't really, well here, like, okay, there's a sell short system with a signal that covered about 2 weeks later for a scratch, but you can see the oscillator is above 0, or sorry, the histogram is above 0, so it was kind of a little bit of no man's land here. And you can also see it sells short here, and it knows to get out. Okay, so it does have built-in exits and so forth as well. But together they're complementary is what the point I wanted to make here is. Okay, and you can also use the scoop to get out, just as similarly as we get in. Scoop crosses 0, you could take some off. So if you entered here, scoop crosses 0, you could get some off. Scoop crosses 45, you could get some off. It never crosses 75 until here, but you can certainly use scoop in conjunction with the exits that are built in. Again, the exits and entries that are built in are mechanical. That doesn't mean you can't use other tools in conjunction with them. Knowing there's a buy signal here and knowing that it's at the open gives you plenty of discretion and room for improving the basic concept. Okay, with MetaStock, it's perfect because you can use it as easy as pie, as we've shown you here. You can run the explorations on hundreds of equities or entities that you want to research. You can run the system test to satisfy you that you're trading the best stocks, if that's what you're trading. Just one last thing on stocks: relative strength is a great concept. So if you get a buy signal in the index, awesome to look for the stocks that have the most relative strength. Don't buy stocks that are getting hammered and hope they're going to bounce back. Buy the stocks that are showing the greatest relative strength. Those are going to be your winners in conjunction with buy signals in the index. But anyway, yeah, great with MetaStock. The system tester, the explorer, the expert advisor. The expert advisor basically does the same thing as here. It has a little bit of commentary, similar to what I've explained to you right now. But all those things together make this hopefully a really easy tool to use, visually intuitive, and I hope self-explanatory.
Thanks you so much, Joe. Appreciate you doing an introduction to this. We'll have some future training as well out there. If you have not picked up Joe Duffy's Scoop system yet, get into a workflow with MetaStock and use an expert system that has been proven at a very, very high accuracy rate. We look forward to helping you modify your trading system so that you can be a more effective trader. So, as always, happy trading.